and welcome to BQ Conversations. My guest today has nearly $11.5 billion invested in India. He's Rohit Sipahimalani, joint India head with Temasek. Rohit, thank you very much for joining us on Bloomberg Quint. To begin with, it has been a good year for you globally because 20% dollar returns for your fund or investment fund, and you've done well in terms of over a various period of time as well. Can you take us through what has been the India performance and what kind of returns you've generated in India?
So we don't disclose numbers specifically by geography. All I would say is that we've been very pleased with our performance in India over the years and are quite comfortable, which is why at least we're looking to steadily increase our exposure in India over time.
And it's been a good last few months as well, because most of your investment came after the financial year closure?
Yes, we invested about $1.5 billion US. We've announced over $1.5 million of investments since the beginning of this financial year, which is April 1. But that's more a function of the fact that when some of these initiatives have come to fruition. Some of these discussions have been going on for a year or longer, but it just so happened that they all happened over a period of 3 months. But yes, that is a reflection of our interest in this market, and it's a market where we hope to be able to continue to find opportunities to increase our exposure.
And one of the bigger one was the Schneider transaction, where you've co-invested along and acquired the business of L&T's electrical business, which is there. What was the rationale going into that kind of business? Because it's what, $750 million which you're going to bring in?
Well, it's in line with the themes that we like about India. So the low voltage switchgear business, which we're investing into, that clearly one of the end use markets is low cost housing, housing in general and low cost housing in particular. And that's clearly a segment we see significant growth in India over the next few years. Secondly, by combining L&T's and Schneider's business in this area, the idea is to use India as a manufacturing base to export to markets of Schneider around the world. So really, a combination of those two things were very interesting for us. And we found in Schneider a partner where we had a common goal for the business, and it made sense to come in and invest here in an area where we thought we could be invested in for the long term.
$1.5 billion since the beginning of this calendar year, fiscal year, and I saw a commentary from Temasek saying that you're going to go slow on investment for the next a year or two. How does it come into
picture? So let me first give you the context of the reason for us slowing the pace of investments going forward, right? One is that global growth is still very strong, and we expect it will continue to be so through 2018. But we do see the US entering a late stage in its economic cycle. We see the Fed increasing rates over the next 12 months and beyond to slow down the overheating in the economy. And at the same time, we see the impact of the fiscal stimulus this year in the US fading as we go into the second half of 2019. So as we go into 2019 and beyond, we do see a slowdown in the growth in the US. Similarly, we do see the impact of geopolitics, such as recent trade tensions, also could have an impact on investor confidence, investments, and therefore growth. So our concern is in connection with a slowdown in growth as we get into 2019 and beyond, which could increase the probability of a recession in the US, which history shows has significant impact on markets all around the world.
But if that happens, the Fed may go for a pause on rates, right?
They could. I guess the interesting thing is that typically when the Fed increases rates, the impact of a rate increase is seen in the real economy only 6 to 12 months from the timing of the rate increase. So the Fed has a very fine balancing act to increase rates just enough to slow down the economy, but not so much to tip it into a recession. And that's always a tricky balancing act. And when you combine that with geopolitical shocks, such as the trade tensions we're talking about right now, it's very difficult to strike the right balance, which is why we're not saying it's a certainty, but we're saying the risks of a US recession have increased significantly if you look out a couple of years. And because of that and the impact it would have on global markets, we are now looking to slow down or be more cautious in our pace of investments. Because we typically invest from at least a 3 to 5 year horizon. Exactly. So it's less relevant what happens in the next 6 months. What's more relevant what happens in the next 3 to 5 years.
You spoke about trade tensions. When you came out with this commentary on slowdown in investment based on what you see in the US, the entire assessment was it is going to be a trade tensions and rhetoric which is there. Now it has been escalated further. In the last 48 hours, you have $200 billion additional of trade sanctions which are coming in from the US. How does your commentary change? Are you going to be more cautious now that US is getting more aggressive in putting, because from $34 billion and additional $16 billion or $50 billion total, now we have nearly half of the US China trade coming under the additional tariffs.
So I think when our base case is still not a full-blown trade war, because we think that would be really bad for the global economy. And if you're getting to that stage, we think people will see reason and compromises will be struck. But in the meantime, we have felt, in the recent past, it could feel so, that in the months to come, trade tensions are going to continue and potentially escalate. So it hasn't really changed our view. I mean, we were not surprised at this $200 billion sort of being imposed. It had been talked about in any case. But I guess it still has to come into place, and it'll take a few months before it comes into place. So I think we'll have to wait and watch. No one has a crystal ball. Our sense is that these tensions will continue through the rest of the year. But we ultimately do not see it blowing up into a full-blown trade war across the world, across multiple countries.
And that's one of the worries, because today, if you look at the commentary coming from President Trump, he's now talking about farmers and farm producers, and he wants to take some actions against them, and that would mean that now he's taking the entire trade tensions to the European Union as well, and to countries like Mexico or Canada, which are neighbors for the US. If that happens, we are heading towards a case of full-blown trade tensions.
Look, as I said, it's very difficult to have a complete crystal ball, but for exactly the reasons that you mentioned, we see the risks rising, and that's exactly why we're being more cautious in our investment stance going forward. If you have greater clarity on that, we could change our position. But right now, given the facts we have on the table, we think it's prudent to be more cautious.
So when you talk about a slowdown in investments over the next year or two, is it going to be a cautious approach towards entry into newer companies or looking at valuations, or you wanted markets to cool off before you pick up investments?
I mean, ultimately, we're looking at investments that would fundamentally give us value over the long term, right? So let's take for the next 5 years. So if we find opportunities right now at the right value, which we think are relatively more resilient to the type of risk that I sort of mentioned, I think we will continue to look at those opportunities. So I think you can continue to see investments from us. It's just that they would have to be more aligned with our themes and companies. For example, we made an investment in Bayer in Germany recently, right? It's the agrochemical business. It is acquiring Monsanto, has acquired Monsanto, makes it one of the largest players in the world. It's a space we're excited about and something which we do want to have exposure to in the long term. It's also a space which is going to be relatively more resilient in an economic downturn. Yes, on a mark-to-market basis, you'll be hit by a market correction. But ultimately, we see us giving us value in the long term. So we will still continue to make investments. And the flip side, of course, is if you do see a significant market correction in response to these risks, that itself could give us value. And then we'd be ready to put in money at that time too.
So as a long-term fund, you would prefer to have cash in hand and wait and watch approach?
Yes, we would like to have the flexibility to take advantages of opportunities that may arise in such a downturn.
India investments, $10 billion till last financial year, and you said you added another $1.5 billion in the current financial year. It's been a slow and steady increase of India portfolio, right, for you?
Yes, I mean, in some sense, we've invested about an average of $1 billion over the last 5 years. I think for us, we see this as a long-term game. We see India as the fastest growing large economy in the world. And there are certain themes out here which resonate with us. So I think we will continue to be investing along those themes. And the idea is to do it on a steady basis right through. Ultimately, when we make an investment, it will be a function of bottom-up opportunities. So it's very difficult to say we will step it up one year or step it down the other year. But we do want to steadily increase our exposure in India, both in absolute terms and as a share of our overall portfolio.
And financial services happens to be the biggest exposure for you in India?
Yes, it currently is. But I would say we are fairly diversified across a number of sectors.
Yes, a new thematic themes have been brought into your portfolio as well. I will come to that in a while. But in financial services, you have diversified within financial services as well, insurance, payments.
Yeah.
Where do you see, you have spoken about insurance in the past, how you see there's a great opportunity for you. But payments is something which is new. You invested in Pine Labs in this financial year. How do you see the payment space growing in India?
Look, payments, particularly digital payments, is clearly an enabler for a number of different things in the economy. Clearly, that's got to grow significantly here. You know, we mentioned earlier, we've also done a study in Southeast Asia. We see that booming out there too. Yes. So clearly, it's a space which is still early, and we've got to figure out the right way to play it. So our approach here is to make relatively smaller investments in some of the promising companies out here. Mm-hmm. And as these companies grow, to really step up our investments and in them and in newer opportunities. So we think it's a fairly long runway. It's still early stages, but it's something we will continue looking at.
And you see the sector is just breaking out and newer players coming into this space, or it's reaching a maturity according to you?
I mean, ultimately, payments in itself is going to be a utility, right? So it's a question of really what you have around that. I see ultimately it as a financial services business. And electronic payments or digital payments can be an avenue to acquire a customer. So I think you have to look at it in that way rather than just someone offering just a single payments or someone coming up with a wallet, because there are dozens of wallets, right? So each one has to come up with their unique proposition. And I think we have to look at things on a case-by-case basis.
Telecom used to be a good, big sector for you. You have reduced your exposure there. You have an indirect exposure through Singtel. But in India, we are seeing a big disruption happening in telecom. And you must be thanking yourself, saying that, okay, I got out of Bharti and went to Singtel, because otherwise I would have taken a much bigger mark-to-mark loss on Bharti. But how do you see the telecom sector?
I think it's going through a big shift, right? It's already consolidated now to 3 major players.
Exactly.
And I think whenever a sector goes through disruption, you do see some impact. But ultimately, what's important is seeing how it ends up in the long term. Most countries where you have 3 major operators in the telecom sector, I mean, the sector is normally quite attractive. Yeah. So we'll have to see how this plays out. I think this is quite early days right now. And we'll have to see how things evolve over the next couple of years.
You see this hyper competition continuing for some time?
From our perspective, again, telecom is no longer going to be the traditional telecom of just providing a pipe, right?
So how do you see telecom evolving?
I mean, ultimately, it's a question of providing digital services to the consumer, not just connectivity. And you see that happening all over the world, right? In terms of mergers happening between content companies, telecom companies. Ultimately, our approach in this whole sector has been also to look at a lot of early stage companies globally playing in the digital area. To see, so that one, we have a line of sight of the disruption that may be there. Secondly, to be able to introduce these companies to some of our larger companies like Singtel, so that they can both benefit from each other. One gets potentially a distribution channel through someone like Singtel, and Singtel may have the opportunity to sort of see some of these companies and work with them to take advantage of the opportunities that exist out there. And all these companies trying to sort of transform. I think the ones who successfully transform will be very successful companies, but they won't be anything like the traditional telecom companies. And for us, that's what's important, for our companies to be able to adapt and make that change.
And what about broadband? Because now that's the next disruption which is going to come into this market. You've been seeing how it has played out in the Southeast Asia, especially Indonesia, where the internet usage have gone up to 3.9 hours a day, much higher than US. How do you see that shift happening in India? And now that content would be supplied through broadband, you have traditional exposure to some of the platforms like Tata Sky in India.
Well, as I said, ultimately it's going to be less about just providing access, right? So the question is, what are the services you're really providing to the consumer? And that's something which we are looking at. That's why we look at different companies who may fulfill that opportunity.
One of the important aspects of investment in any company is governance. You ensure that they have good governance standards that is followed. In the financial services space, we have seen a couple of cases where one of the investment is yours as well in ICICI Bank. We've seen governance issues there. What is your view on how it's been handled and how it should have been handled?
Look, it's probably not fair for me to comment on a specific company. What I would say is that for us, having high standards of governance is very important, but we're not involved in the day-to-day management of our companies. We expect the boards of these companies to sort of uphold those standards of governance, and we engage with these boards regularly, to feel comfortable that they're doing so. I just leave it at that. Clearly, in this particular case that you mentioned also, I mean, the board is taking steps to sort of do an investigation, and we leave it to the board to make the right calls out there.
NBFC space is also a very aggressive space for you. Fullerton is one of the investments I think you have in that space, and you're increasing it and increasingly looking at that space as well. And this is one of the sectors which has grown very fast within the financial services. Are you looking at more opportunities for any other NBFC?
Yeah, I would step back and say generally overall financial services is a space we find attractive. As you mentioned, we have exposure to banks, we have exposure to NBFCs, we have exposure to insurance companies, we have exposure to payments companies. So we're there throughout the ecosystem. Yeah. And NBFCs also play an important part out there. As you said, we have a large exposure through FICC, to Fullerton India Credit. And I think it's a space we will continue to sort of look at seriously.
So if I'm going to ask you, okay, tell me between these four units in the financial services space, banks, NBFCs, you have payments and insurance. Which are the segments which are growing much faster than your expectation?
So look, I mean, I would say they're all attractive segments.
No, I'm not talking about attractivity. You have already invested in them. I'm just saying which segment has outperformed your expectation.
I would say in general, if you look at the newer spaces, right? Because if you look at banks and NBFCs, I mean, that's something that has been continuing, a trend that's been continuing for a long time. Yes. Some of these companies have actually been growing consistently at over 20% a year for the last decade. So in that sense, their continued growth has not been a surprise. I would say some of the areas like insurance and payments, where the takeoff has been more recent, and you've seen a certain inflection in growth in the last few years, that probably has surprised a little bit on the upside.
And does it mean that it allows you to have more investment in these two sectors?
I mean, we're looking at investing across these spaces, right? So I would say we would invest in all of them.
So is the theme of the India basket changing a little bit towards more new technologies and emerging technologies from traditional companies?
So let's step back, right? What are the areas that we are looking at? I mean, we clearly, we are looking at, as I said, apart from our traditional areas that we were looking at in banks, financial services, which are really proxies for the growth of the economy, we're looking at digital enablers, right? Both that are disrupting traditional businesses, but are generally just enablers across different businesses. We are looking at general sectors that benefit from the rise of the affluence of the Indian consumer. So insurance is a case in point, healthcare services is a case in point. And then we're looking at platforms which would benefit from certain structural changes in the economy. So logistics is one area where we've done this joint venture with Ascendus to look at investing in warehouses throughout the country. So I would say it's broad-based. The one common underlying theme would be the rising affluence of the Indian consumer. But that's really spread across a number of different industries.
But, when you started investing in India, one of the themes which you had was how you can get into that middle class income consumer and his spending habits and try to invest in those themes. Now you're moving to the affluence part of it, where aspirational, services or, for that matter, products are now coming into it. So it's a scale up for you as well, right?
Actually, it isn't. It's actually the same thing. There's rising affluence of even the middle class consumer, right? The middle income consumer is seeing growing incomes. So someone who would have spent only on goods is now wants to spend on education, wants to spend on travel, wants to spend on eating out, wants to spend on insurance. So it's actually the same theme that we're talking about. So when I say rising affluence, it's not talking about affluence at the upper end of the market. We're talking the growing middle income population is seeing increasing affluence across a number of emerging markets. That's the theme we're trying to play on. Across emerging markets, but also specifically so in India.
Slides I was looking at, it showed that the consumer is a good big chunk of your portfolio globally. That's a segment which hasn't done much well in terms of returns. It hasn't given you the portfolio returns. It's slightly lower than the portfolio returns. Why is that? And do you see the same trend happening in India as well?
So I think you're referring to the disclosure we'd made about four focus sectors that we've had since 2011. And consumer was one of them. The others were sort of technology and financial services, etc., and life sciences and agriculture. And there you saw that the consumer returns were more in line with our overall portfolio, whereas the others had significantly outperformed. Part of it is because a large part of the consumer investments we made are still private, and we hold those private companies at book value. So it doesn't fully reflect the returns out there. In India in particular, as you mentioned, our consumer investments have done extremely well.
And do you plan to take many of those investments public at some point in time? Or?
We will. At the right point in time, we will. I mean, there's no urgency for us to do it. But at the right time, yes, we will look at taking some of those companies public.
Because that's going to be a challenge for you, because on one hand, you're projecting that there's going to be a slowdown coming in because there's a recession coming in, and it will have a domino effect on many markets. And typically in a recession, the market value comes down by nearly 30%. And that also brings in a challenge of how to exit during that period of time, because you will not be able to get the right valuation as well.
So as I said, if you step back and look, I mean, we invest out of our balance sheet. We've got permanent capital. We're in a net cash position. We're AAA rated. We are highly liquid. If you look at our balance sheet this year, our level of cash and short-term investments is amongst the highest that we've had in the last few years. So we don't really need to exit during a downturn. I mean, our thing is to have resilient companies that can ride through this downturn when it happens. And there's really no need for us to divest at that point in time. Actually, that for us will be an investing opportunity. Yeah. And having a liquid balance sheet allows us to do that then.
Apart from being a large investor, you also started off early stage investing through one of your arms, Vertex Ventures. Is that also looking in Indian market for possible investments?
Yes, actually, Vertex is getting increasingly active in India. They've raised a fund specifically for Southeast Asia and India. Earlier, they used to invest out of a more global fund. Yeah. So they're actually getting quite active out here.
And any investments they've already made?
They've made actually quite a few investments in India. We ourselves also look at early stage investments, but there's a slight difference. Vertex may look at things that are Series A and things that we would probably look like Series C and beyond. Beyond that, we also have a platform through Innovent Capital, which provides venture debt to the early stage companies. So really, our view is really to have be a part of the ecosystem in the early stage companies, so that we can find innovation, we can find the new technologies that we want to really back over the long term.
I was just looking at your portfolio and your commentary as well, and you spoke at length about how Indonesia is also one of the emerging countries with respect to new technologies. I wanted your thoughts on how, when you look at Indian market and the Indonesian market, do you see similarities, or there are some areas where you see Indonesia much better?
I mean, I wouldn't really compare the two. We see both as attractive opportunities.
Because as a fund, you will always look at geographies and you look at which is the best one to pick, especially as far as investments go. You went for Gojek in Indonesia. You were in talks for Ola, but I don't know that materialized or not. But you went for Gojek there.
So if I were to say, if you look at Indonesia, India is clearly a bigger market in terms of population and number of internet users, etc. If you look at Indonesia, it's the general per capita income level is higher than there in India. So the nature of opportunities are going to be slightly different in both markets. But they're both very fast-growing internet markets. And so therefore, we expect to see significant opportunities in both markets. Today, I would say we have many more early growth companies in India than in Indonesia, directly invested by us, because some of the opportunities in Indonesia are still earlier stage than what we would typically go into. But Vertex has been quite active and also has made quite a few investments out there. So we are tracking those companies. As they grow bigger, hopefully we will have the opportunity to back the winners out there. So we're looking at both markets closely. I would say as of today, we have more opportunities in India that we have invested in, but we will continue to look at both markets.
Let's talk about some disruptors in our economy as well. Shared economy is something which you have been bullish on. How do you see that changing the entire dynamics? You are also talking about electric vehicles coming in, and at some point in time, autonomous, maybe not immediately in India, but at some point in time, how does it, change the way you look at?
These are global themes that we're looking at, right? So the shared economy improves productivity and has the potential to disrupt a number of industries. So we're looking at that, globally and trying to find out where those disruptions are likely to happen and how we can take advantage of them. And we are invested in quite a few such businesses globally.
But in India, if you put that and you see early trends of that coming in India as well, in multiple cities in India, do you see that having the same kind of disruption that it had globally?
The shared economy should, because it's really disrupting business models. So there's no reason for that not to have an impact in India like it's had elsewhere. On other things that you talked about, like electric vehicles, I think there would be a significant opportunity in India. Autonomous vehicles, probably a little further away in India compared to some other parts of the West. So I think it's a question of timing. But I think electric vehicles, yes, we do.
Are you invested in?
We are invested in certain companies in the electric vehicle space. So, for example, in China, there's a company called NIO. We've invested out there. So it's a space we track quite closely.
And autonomous?
Autonomous, a lot of these companies are also doing some work on autonomous vehicles. Okay. But I would say it's still early stages. Again, we are looking at certain startups that are doing work in that space. We are looking at some existing companies who may have a broader sort of product line, and autonomous is an area that they are focused on. So I would say we are tracking the space closely, but that's a little early still right now.
Rohit, I've been speaking to you for at least 4 or 5 years now, and every time we spoke about infrastructure, you told us about the kind of opportunity which is there. You have invested a couple of bits, theme related, like GST, you're getting into logistic, warehousing and other stuff, but not specifically to infra, roads, highways or other stuff, except for Adani ports, which you invested recently. How do you see the infra space looking at from the way you come in? Do you see challenges there for any investor who wants to invest in this space?
I would say infrastructure, hard infrastructure, the way you're talking about, is very operationally intensive, right? So us as a financial investor, it is a little more difficult for us to invest directly in the space. But through our portfolio companies, actually, we have been investing quite a lot in Indian infrastructure. So PSA, for example, in ports. Yeah. Semcorp, which is one of the largest power investors in India. Ascender Singbridge, which is doing IT parks, other stuff in the real estate side, apart from the logistics joint venture that we're doing with them. So actually, our portfolio companies have been one of the larger infrastructure investors in India. And we think they're better equipped to do the hard asset stuff, the actually on-the-ground infrastructure, which requires operational input, whereas we come in more as a financial investor, and some of these areas may be just better suited for them to do.
What about ports? Because Adani Ports you invested recently.
But that's a listed company where we have a management team sort of doing that and a board sort of looking at that. So we don't need to get involved in that operationally. We're there as a financial investor in a listed company.
But what prompted you to look at the ports space at this point in time?
We've been an investor actually in Adani Ports for a while, for a few years. So this was just increasing a stake that we had in the company.
And you see ports being the growth in that segment much better. We haven't seen other sectors doing in the infra space. We haven't seen any other big investment coming in. Ports is something which is also, you're talking about having interconnected ports and other stuff coming in there. But do you see growth happening there as you see, because you invested quite a bit there?
Look, I would say generally speaking, I think we do see the area as one of growth. As you have greater connectivity and growth of the economy, this sector would also sort of benefit. So I won't sort of go into specific details of any company, but clearly we look at each company individually, and if we find the opportunity is attractive and the value is attractive, we invest in it.
Among the 6 themes you have, I think you invested in all of them through some in India. But which are the 2 or 3 themes which you think are are growing at a much faster pace and are going to be they will outperform the normal sectors or themes which we normally see in the country?
So I would say in India in particular, the 2 or 3 themes that are at the forefront. One is, as I've mentioned, the rising affluence of in emerging markets, which is really the growing middle income population.
So that would be what, technology?
No, but it would be things like, as I said, they want to sort of consume experiences, right? So, or different types of products like healthcare services is where they want to focus on, or insurance and things like that. So that's an area, obviously, that we do look at. The evolving consumption, the changing patterns of consumption of the Indian consumer. That's a big part of our thesis out here in India. The other area is, when we talk about the digitization of the economy, right? So things that are digital enablers. So whether it's an IT services companies like UST that we invested in, or some of the payments companies that we've talked about, or companies like Policy Bazaar or Zomato, which basically are using technology to sort of disrupt traditional businesses or create new business models in India. So I think these are some of the areas, I would say, if we look at our global themes, I think the connected world, what we call, and the world which is a smarter world, which is basically helping improve productivity through either models such as sharing economy or software. And these are some of the themes that we look at in India.
Themes like content and media, is that something on your watch list?
I think we look at the space and we will look for opportunities. We haven't, outside Tata Sky, we do not have much exposure in the media space right now.
From a internet and data usage point of view, you have most of the content companies now going digital, putting it on mobile, and and when you talk about connectivity or interconnected world, people are now consuming everything on mobile, right? So in that sense, are you looking at those kind of opportunities as well? Not in India, globally as well, if you are.
I mean, I would say more generally, as I said, within the TMT world, our greater focus is on increasing our share of technology within TMT in our portfolio. That's been a key focus for us. So, I mean, technology used to be in 2011 close to 0% of our TMT portfolio. I mean, today I would say it's probably 25 to 30% of our TMT portfolio. So I think that's the major focus. Now, technology intersects with a lot of other businesses. You can see technology in software, you can see technology in big data and digitization, and you can see technology coming into content too. At this point, we do not have that much exposure to the content area, but it's an area we continue to look at. When we find the right opportunities, we will look at them.
And finally, as economy, do you see a stable growth path for the Indian economy? Do you see any disruptions coming in the next few years? Even though globally you have a geopolitical risk coming in, you have US recession, which is still yet to happen, but it's a forecast which you're looking at. How will the Indian economy be performing according to you, given all these challenges or headwinds which we are seeing?
So growth clearly seems to be picking up in the Indian economy. We've seen that in the last couple of quarters. And we sort of expect that trend to continue this year. We're also seeing that in earnings of companies, which are beginning to sort of pick up. Now, if you do have a recession in the US, which has an impact globally, yes, it's clearly going to have some impact on India, right? Because at some level, the level of FDI coming in, investments into India will be impacted. To some extent, exports will be impacted. But overall, India is still very much a domestic economy.
IT services will be impacted the most?
Some areas will be impacted, right? But overall, I would say, given India is still a very domestically driven economy, it should be relatively more resilient on an economic basis compared to a lot of other economies. But will it be impacted? Of course, it will be impacted if you have a global slowdown in growth. I would say markets are likely to be more impacted in the short term relative to the real economy, which I think will be more resilient in India for the reasons I mentioned.
Rohit, thank you very much for giving us time today, and thank you for joining us on Bloomberg Coin. Thank you.
Thank you.